Hey everybody, welcome to the channel. Hope you guys are doing well today. In this video, we're going to be covering a few new Solana protocols that I discovered within the last few weeks, and also cover a few protocols that I've talked about in the past, just to give you guys a brief update. After we witnessed that huge surge in interest in Solana-based NFT projects, we also saw huge increases in TVL, prices of the DeFi tokens, and just across the board a general interest in Solana-based DeFi protocols. And despite the significant upside we've seen, I still think there's some room to run, so it's a perfect time to get more involved in these DeFi protocols to extract maximum value. Now, if you're new to DeFi or NFTs and you guys want more guidance or assistance, the best thing to do is join a community of like-minded individuals. And so for that reason, I would like to extend an invite to all of you guys to join my private Discord channel. But if you don't have the time or the interest for Discord, at the very least, make sure you guys give me a follow on Twitter. This way you can stay up with industry highlights and also learn about projects that I'm personally interested in. Whether you want to join my Discord channel or follow me on Twitter, both the relevant links can be found in the description below. With the intro out of the way, let's go ahead and dive into this video. All right, the first protocol that we're going to discuss in this video is Port Finance. This protocol aims to provide an entire suite of fixed income products, including variable rate lending, fixed rate lending, and interest rate swaps. And if we scroll down here, you guys can see some of their partners and a few of the firms that have decided to invest in the protocol. And by the way, folks, that's part of the reason why you're seeing so many lucrative yield farming opportunities on Solana. Many VC funds are on the loose looking for opportunities in DeFi, and in many cases, because these protocols have just launched, VC funds are finding abundant opportunities within the Solana ecosystem. Now, because of the high speed and low latency of the Solana blockchain, I think we're going to see certain services and core DeFi primitives launched on Solana that may not be possible on Ethereum. Right now on Port Finance, you can go ahead and supply assets to earn a boosted yield, or you can go ahead and borrow against your collateral. But if you take a look at the white paper, the baseline service is going to be a lending protocol that's similar to Compound and Aave, which I just showed you guys. But as they iterate, you can expect a fixed rate lending protocol that utilizes the Serum order book, and also an interest rate swap market that utilizes the Serum order book. Now, the variable rate lending protocol is going to be similar to Compound Finance on Ethereum, with three core features. It's going to have a variable rate based on utilization, cross collateral support, and flash loans. And given the speed of Solana's blockchain, Port Finance provides a significant advantage compared to current state lending and liquidation on Ethereum. As liquidators can participate in the lending market more efficiently, users on Port Finance may take advantage of a lower collateral ratio. And for those of you guys that may be new, this is basically LTV, or the loan to value ratio that you often see on centralized lending platforms or DeFi protocols. And so with a higher LTV, you're going to be able to borrow more money against your asset versus, let's say, Aave or Compound. And in the future, they also plan to launch leverage yield farming. And to my knowledge, one of the few protocols that already has this service available is SolFarm, which I've talked about in a previous video. If you haven't watched that video, I'll make sure to go ahead and link that in the description below. Just to quickly summarize how leverage yield farming works, you basically borrow money at leverage, and then you go ahead and split that into the two assets of the pool and start yield farming. So let's say the base rate for the yield farm is 84%. If you 3x that, you'll be getting 254%. And when you do that, you also 3x the trading fees that you accumulate from all the trades that are done in that pool. You add those two together, you subtract the borrow rate, which can be very high, but since you're earning so much from the farm, you'll still be profitable. Now, the boosted yields that you see here, they're going to be supported by the governance token, and the governance token for the Port Finance is PORT, Port. And right now, and typically what happens, like any other token, is going to get inflated away initially, and many people are just going to farm the token and dump it. But the token is important for governance. It's going to help decide on various parameters of the protocol, including maximum loan to value ratios, which assets to support, and also liquidation thresholds. At some point, they're going to be sharing borrowing fees and also flash loan fees once they initiate their staking program. Moving along, we have Orca. Now, this protocol is basically like your Uniswap or SushiSwap. Obviously, it's going to have its nuances, and their objective is to make Orca the easiest, fastest, most user-friendly AMM on Solana. Now, after they interviewed DeFi users, one of the biggest pain points they found was determining whether a pool currently offers a fair price. And so to ensure that the users get the fair price, they've created an automated market maker that will check for the following conditions before a trade is executed. Number one, the rate is 1% within the listed market rate on Coingecko. Number two, slippage is less than or equal to your tolerance setting. Also, with most AMMs on Ethereum, there's no way to check your balances without having to open a browser extension. So for this reason, they've added a tokens panel directly into the Orca interface. This way you can see your balance for all the tokens listed on Orca, including live updates when you make a trade or provide liquidity. Now, outside of bootstrapping liquidity, they also have other features and services that are going to be integrated into the platform. One is the wormhole bridge, which basically allows you to transfer assets from Ethereum to Solana and back and forth. They're also going to have collectible valueless tokens for early adopters, which most likely means NFTs. You'll see more trading pairs in the coming months. They're going to have analytics for price, liquidity, volume, fees, and much more, and also language options in the Orca UI. Now, in terms of liquidity mining incentives, they offer double-digit to triple-digit yields on some of the more popular pairs. And if you're a stablecoin farmer, you can get up to 20% on your stables. One of my favorite pairs here is probably ETH/SOL, especially when we're in a risk-on environment. But moving along, you can provide liquidity to any pair that suits your preference. And if you scroll back up to the top here and you click double dip, you can actually get dual liquidity mining incentives. If you simply take your Orca LPs and deposit them here, you'll earn Orca tokens and tokens of the respective projects here. But anytime you add liquidity to any pool or you double dip, always look at the dates. For example, in this instance, it may not be worth it because they're going to expire this pool on September 13th. Moving along, we have Sunny Aggregator, Solana's composable DeFi yield aggregator. And the reason why you need yield aggregators according to this project is because there's so many Solana DeFi projects launching, it's become increasingly difficult for users to manage their yield farming positions across different interfaces. A yield aggregator simplifies this process by offering a streamlined solution for discovering and entering farms. The yield aggregator can then offer additional strategies such as automatically compounding the farm tokens. And the project also compares itself to Yearn Finance in terms of composability. For example, one mechanism is Sunny's AG token, the concept which is similar to Yearn Finance's Y tokens. When a user deposits money into a Sunny pool, they receive AG tokens that represent a pro rata share of the pool. So in other words, when you guys deposit your Saber LP here, in return you're given an AG token from Sunny. And that token is basically your claim on all the fees generated by the LP position and also the yield farming rewards that you're receiving. And in terms of composability, one example is Alchemex on Ethereum that uses Yearn Finance's composable tokens to automatically repay loans. Another example is Yearn Finance's Y curve, and that's used as collateral in Cream Finance to take out loans. Now they're boosting the yields across the pools with the Sunny token, and the current supply and distribution of Sunny looks like this: 22% to initial contributors with a 2-year linear vesting period, 26% to Sunny DAO Treasury, 52% for mining reserve and airdrops. So you can see here they haven't gotten any investments from VC yet. In fact, they pride themselves as being a DAO that's one of the first DAOs to natively be born on the Solana network. They want this protocol to be community owned and governed. And even though it's going to be super inflationary in the beginning, they do have a way to make it somewhat deflationary and also help increase the price over time. All the performance fees charged by Sunny go towards the Sunny DAO, and this revenue will be partially used to perform buybacks and burns of Sunny. The performance fee is currently 16% taken on non-Sunny yields. The APY displayed in the Sunny app already takes into account the performance fee. At launch, the buyback and burn feature will not be implemented, but rewards will be accumulated in an account belonging to Sunny DAO. And on top of that, they're going to be airdropping tokens to Osmosis holders. And basically, projects do this anytime they're trying to market their services. So basically, they're trying to get the attention of everybody that's yield farming on Osmosis. And if you guys follow my newsletter or you guys are on my private channel, you guys know that I've been in the Osmosis pools for the last few months. And I also shifted my strategy about a couple months ago to just accumulating Osmos instead of selling them and rebonding them back into the pools. And that strategy to date has paid off. Since I started LPing, the token has gone up almost 6x. Now, because they're very new, there's obviously risks associated with this protocol. So personally, I have decided not to LP in the Sunny Aggregator, despite the yields being very lucrative. And I also wanted to highlight the fact that there hasn't been a public audit. So if you guys decide to LP into the pools, I want you guys to be fully aware of the risk. And typically in DeFi, the yields tend to be very correlated to the actual risk, much more so than legacy finance. And so anytime you see a very high yield in DeFi protocols, it probably means that it's a new protocol and it hasn't been battle tested yet. But what happens over time is the protocol gets thoroughly audited, the protocol gains more credibility as we go through more periods where there's no hacks or adverse events, and well-connected whales will go ahead and collect information and intel before depositing their funds into the protocol. And by doing so, they significantly reduce the yields. And when the yields go down, it's typically an indication that the protocol is now safe to LP in. And whenever you're researching protocols, I would also recommend that you guys check out the Telegrams and Discord channel, wherever the protocols team is most active. This is a great way for you guys to get your questions answered and also get to know the team a little bit better. Now that pretty much wraps it up when it comes to the newer protocols on Solana. Now we're going to quickly review some of the protocols I've covered in the past in case you're new to Solana. To begin with, we have Saber, which I previously stated was a DeFi cross-chain liquidity network, and it has deep liquidity for wrapped assets on Solana. When I first looked at this protocol, the yields were 20 to 40%. And since then, despite the token going up over 60x since I introduced it to you guys, the yields have been significantly diluted down to the single digits. Now, in some cases, like for example, Luna, it's still in the double digits. They still have some pairs here for USDC, like USDC Pi that's offering 10%. They have PSOL and PRT Sol offering 12%. PBTC and RenBTC offering 18%, DAI and USDC offering 23%, BUSD and USDC offering 24%. And so what I think has happened is larger players who invested in the protocol have begun depositing in these pools. And that's why you're seeing a TVL close to 1 billion for USDC/USDC. Now, out of all the protocols that I've shared with you guys today, I think this one here is probably one of the more safer ones. Since it's basically a liquidity protocol, it's not as complex as some of the other services that are being rendered on Solana's network. So the surface area for an attack vector is a lot smaller. Next up, we have Mecurial Finance. Unlike the previous protocol, when they were first launched, they were exclusively only a liquidity protocol for stablecoins, basically allowing users to change between the various stablecoins supported on Solana. So for example, you'd be able to trade between USDC and UST very quickly with relatively deep liquidity. And recently they added the support for SOL plus PSOL. In case you're wondering what PSOL is, there's various projects out there that allow you to stake, and in return for staking, to make SOL more liquid, they give you a representation of the SOL that you're staking. So you stake SOL and you get MSOL. So in other words, MSOL represents your SOL plus all the staking rewards that you've accumulated. Normally, you'd be able to stake and lock up that liquidity and earn a yield, but you wouldn't be able to access that liquidity. So now with MSOL, you're able to access that locked liquidity. And what some people do is they use that MSOL as collateral to take out a loan. So to summarize that real quick, imagine staking your SOL, in return getting a representation of that SOL plus the staking rewards in MSOL, and then you go ahead and take that MSOL, deposit it into another protocol, use it as collateral to take out a loan in, let's say, stablecoins, and you deposit those stablecoins into another protocol to get a yield. So in that setting, your SOL would be accruing staking rewards, plus you'd be getting another yield from your stablecoins. But what's happened is that there's just so many projects that are doing this, you're getting potential liquidity fragmentation. So MSOL, SOCN, and STSOL basically serve the same function. And to resolve this problem of fragmented liquidity, they came up with PSOL. And PSOL can be claimed for any one of these staking pool tokens. This way, instead of having 3 separate pools, you can just have one aggregated pool. And currently, if you take that over to Mecurial, you can get a 15% APY on it. And remember, PSOL acts as a claim on your staked SOL. So not only are you earning this 15%, but you're also earning a yield on that stake sold. So the net result of that is that you're auto compounding on steroids, because number one, you're earning a staking yield on your SOL that's represented by PSOL. Number two, you're earning fees that are generated by this pool here. And number three, you're earning yield farming rewards offered by Mecurial. So if you're not into NFTs and you're not into DeFi tokens, you're strictly a Solana bull, a pool like this would go a very long way in increasing your SOL stack. Moving along, we have Raydium. On Raydium, they've built very deep pools, so you can swap between tokens. You can go ahead and provide liquidity into one of the pools, and by doing so, you can earn farming rewards. They even have dual farming incentives for Polish/Ray and Atlas/Ray. One of the pools I like in here is Ray/Ethereum. I think Ray is going to continue to go up as long as Solana is in its expansionary phase because of all the services that they're offering and all the partnerships that they've made. And I'm also very bullish on ETH. So for me, this is one of the better pools here. And I also have assets in these two pools. And if you didn't want to get exposure to any of the other assets and you're strictly a Ray bull, you can deposit it here for an APR of 28%. They also have an accelerator program that acts as a launch pad. Recently, they helped launch Star Atlas tokens here, Polis and Atlas. And now they're going to go ahead and offer a launch pad for Grape. And personally, I'm very bullish on Grape. I think Grape protocol is going to be a key infrastructure component when it comes to DAOs. And since they're offering that verification service, personally, it's made me very bullish on Grape. And lastly, we're going to cover SolFarm. I showed you guys before, you guys can go ahead and leverage farm here. I wouldn't recommend this if you're new to DeFi or you haven't used a service like this before, because if you make the wrong moves, you could end up losing money by doing some leverage farming. Because whenever you take out a leverage position, you take a slight short on the borrowed asset, and you're basically going long on the assets that you're buying. In this case, it would be Atlas/USDC. But they do offer a very easy to use service for people that are new to DeFi. For example, since they're offering leverage farming, they have to borrow the tokens from somewhere. And in this case, they have these lending vaults. And so what you're doing here is you're depositing money that's being lent out to leverage farmers. So you don't have to take the risk that leverage farmers are taking, and you can still generate a very respectable yield. You have double-digit yields for stable coins. You have Serum and Ethereum that are generating 12 to 14%. You also have Star Atlas and Polis supported here. For example, you can get 22% on Polis. And they also support other Solana-based altcoins. Now, I didn't mean to be very detailed in this video. I just wanted to introduce a few protocols for you guys to check out and do your own research. But I'm always looking for video ideas. If there's something that I didn't cover or you guys wanted me to expand on, make sure you guys express that in the comment section below. And if you're completely new to DeFi, or even if you're a seasoned DeFi farmer, I do offer additional services that can streamline your learning. And the way you access those services is by heading over to my Patreon. By joining one of the higher tiers listed here, you'll get one-on-one access with me. And if you don't see something that suits your needs or you wanted a customized package, just direct message me on Twitter or Discord and we can set something up for you. Or another option is if you can't afford some of the more premium packages, for just $20 a month, you'll be able to access all my private channels on Discord where I publish my moves in real time. I'll also throw in a free subscription to the paid version of my newsletter along with many other benefits. So if you think any of these services could benefit you in any way, make sure you guys go ahead and click the Patreon link in the description below. Well, that pretty much wraps things up. I hope you guys enjoyed today's content. This is CryptoOneStop signing out. I'll talk to you folks next time. Bye.